Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. I think we're kicking butt here over on YouTube. Let's see. And welcome back to. Yay. Welcome back to the frivolity. Of course, actually, of late, I've gotten a bit more religion, so I'll try and make this a nice, 20 minutes or so. Um, the. The market, of course, itself completely dominated right now, especially in the North American eyes, with coronavirus, COVID-19. Obviously, that goes without saying. I was pleased to see, just me personally, a little bit more leadership. Public commentary by elected politicians yesterday that were not federal, I think helped sort of ease the market, especially in New York City, where that's sort of the Wall Street mecca. So, they sort of dictate where the market's going to go, how they're feeling. And then we had further conversations yesterday from the federal government in the United States. Sort of showing again some more leadership here, so that's encouraging. I think I've talked to you in the public that really we won't know that a bottom is in until sort of the 1% say, okay, enough down. You start going back up now, Mr. Stock Market, and of course that's all about whether the credit markets are happy because we live in this world of debt. And as long as people can still keep borrowing money, which the Federal Reserve has basically said you can borrow all the money you want at no interest. I don't think the banks' balance sheets are the problem this cycle. This is all about this sickness and healthcare. And I do feel, for whatever it's worth, sort of big picture rant, that this is probably going to set a tone for the next 10, 15 years in our economy. I have noticed recently war on terror references around the world aren't getting any attention at all, so it seems to me that the world's attention's moved elsewhere. And of course oil companies themselves are not even calling themselves oil anymore. They're calling themselves energy companies. So I have a feeling that sort of things like Mideast tones and how our attention is focused on the Middle East for the past 40 years. I have a feeling that's going to wane a bit, but who knows what the hell will happen. With regard to the market itself, we're still in that sort of transition window where, the hearts were broken. The late bulls got punished. Those people that didn't have the fortitude, if you will, to liquidate on failures and just, go back to the sidelines and cool your jets. They're still, feeling a bit of pain here. And I don't really have any clear signs that the market has officially bottomed. If anything, I have a lot of signs that we're doing the dead cat bounce right now. And the jury's still out. Usually, though, through these kind of chaotic events, by the time the public is actually looking at the stock market and worried about it and stuff, the horse has already run away. And people end up looking back in hindsight and regretting, not doing things. At the same time, too, the irony of it all is that often opens up windows of opportunity. And, one stock actually I did buy a little bit of it the other day on more of sort of a lower time frame, and I will keep buying more as long as the stock is trading below the cash that's on the balance sheets. It's catching a bid here, and I'm willing to buy more of this Silvergate on any weakness, as long as it's trading below the cash on the balance sheet. And also, too, I'm even looking at like big indexes to be investing for my retirement plans. You could argue that the entire country of Canada just went on a 20-30% sale. And, of course, this is the business. When stuff goes on sale, nobody wants to buy. So my big message across the community was, holy crap, get your shopping list ready. What stocks have you always wanted to own? But they were just, too expensive before. Well, ironically enough, Now they've gone on sale. Um, if you can't find sort of intrinsic indicators of value, like in crypto, cost of production, can I buy my asset below that cost of production? Okay, well, if that's the case, I'm buying fundamental value. I do like the idea, frankly speaking, that we've come down into some fundamental value windows, and now, stocks are trading below cash on the books, for example. You want to go into now technical analysis hunting mode to really time your purchases. Awesome. That's basically what rational analysis is all about. So if I start seeing W's come in on these major indexes and big assets, man, I really want to get bullish. But like I said, I don't have W's yet. I am doing a little bit of nibbling. But I'll tell you, a lot of the sort of penny names that I was looking at that, had maybe questionable earnings streams and questionable balance sheets, man, all of that stuff went out. Poof, gone. I've really dialed back sort of my risk-taking temperament of late, no doubt about it. I think probably a really good analogy of market state is when we look at something like the US dollar index. What I do find interesting about the dollar index is actually these fractal signals have been very crisp, and they've had legs. This fractal top that we talked about there a few weeks ago, I didn't think they were going to break the bottom of the market, but they did. But what was fascinating about this, and I sort of talked about it, that I wanted to let this US dollar weakness translate into a nice new short opportunity on the euro. Given market state, unfortunately, it looks like I was sort of thinking in the right direction, but damn, this market is just up and down like a horse drawers. I didn't have anything set up for me. Look at that euro. It just went straight up and straight back down. And I didn't get anything to set up here. Brian, he likes his nice M's and W's. This is just up and down like a horse drawers. And, the messages have been the same repeatedly from me that I don't really like the economics out of Europe right now. It scares me immensely. Regardless of coronavirus, this can only make that situation worse. But anyway, you shake it, classic 38.2 bounce off of higher time frames. And our general rule, I was looking for a rally up into reload zones, but it looks to me like the market just simply rejected 38.2 levels here. And straight back down. Oh, what a mess. And interestingly enough, when we see the US dollar acting like this, actually this is a, holy crap, I'm scared poopless market vote. And we pointed out, I guess, about a week ago, this empire that put in a bottom, and sure enough, it's chugged higher here. Commodity currencies in particular look very, very bad right now. I've been talking about how I don't want to be a commodity bull. Don't want to be involved in the Canadian currency, or, I was thinking maybe the Australian currency could dodge this, but commodity currencies in general, very dangerous. And ironically enough, euro's not getting hit nearly as hard as something like the Canadian dollar. I think it's coming off a good chunk here. I can't even remember the damn symbol. And I'm just blabbing here today. Sorry, everyone. Canadian dollar just getting absolutely destroyed here. And I don't, I'm not a Canadian dollar bull right now. Risk on, risk off. Obviously, Canadian dollar is heavily reliant on energy markets. So with the collapse in oil here recently, I've gone on at length about how Canada's in really bad shape here, and it could only get a lot worse here for Canada. So be careful, Canadians. Stock market, yes, we hit bearish objectives. When we hit those AB equals CDs, all the higher ups, 1% said, hey, we got to go and save the stock market now. And I've actually heard now that the Federal Reserve is actually thinking about going in and buying corporate bonds. So that's how crazy this world's gotten. Now they've, because it used to be their quantitative easing, we're only buying like mortgage-backed securities. We're only buying U.S. treasuries. Now they're willing to buy U.S. corporate debt. And in a weird sort of way, I think this is going to be a bailout of the U.S. shale industry. we'll see what happens, and they'll probably wrap it all nice and politely in some sort of coronavirus bazillion gazillion dollar fiscal stimulus plan. But buried in the paperwork is going to be some bailout for the U.S. shale oil industry. Point of the matter here, though, is that we don't have any W's working just yet. So you can see oil is actually threatening to have another leg lower here. So the U.S. dollar is screaming higher. So jury's still definitely out here. And of course, celestial event-wise, I'm not looking for any kind of turn here till the end of the month. This next couple of weeks could still be another leg lower here, everyone. Just be prepared. Bond market, I do like the idea that, like I said, I think it's like $800 billion Trump is asking Congress now for this fiscal stimulus package. And of course, the bond market goes $800 billion in new U.S. Treasury bonds. Oh boy, here comes a big chunk of supply. So not a surprise. Now, the issue and what I sort of think will mark the bottom in the market into the month end is we might wake up and the bond market actually is cranking lower. Brian and his crazy rising interest rate thesis. And the stock, and everybody in the public's like, oh my God, the bond market's collapsing, and all that, right? This is dangerous, what we're seeing here, folks. And that might actually be sort of that final shoe that drops. The stock market has another leg lower as the bond market craps out, and I don't know who's going to save the day here. But interestingly enough, how it looks to me like there's some sort of big catalyst that's coming here at the end of the month. We had a lot of fun today in the Daily Brief on the site talking about gold. We had sort of talked a little bit about this with you guys in the public video yesterday. I just said briefly, I wouldn't be surprised if we have a period where gold actually rallies back and bonds come off and they sort of close that spread. And to a certain degree, we had the smatterings of a gold bottom here this morning. It was more like lower time frame basis. Wouldn't fall in love with the trade. No W's here whatsoever. This is all just about, holy moly, ridiculous volatility and what we call a dead cat bounce in the market. And this trade sort of looks like this. I thought this was a classic day traders trade here. Nice momentum divergences. Really nice little breakout of downtrend lines, and off of things like the hourly charts. It's really fascinating to see. Maybe it was here. What was it that we're? Maybe it was hourly, not daily. Sorry, silly Brian. Yeah, so we had this real interesting battle at the 50 line. I've talked to you guys about signals through the 50 line on RSI. So you can see that the hourly, it was like a day traders trade setup, came in through here. Breaking this downtrend line. My hunch now is actually this downtrend line actually now acts as support. And our rule, of course, is that we're not allowed to take trend line breakout trades. So you can't buy this. You have to wait for the W on the other side of the trend line. But we had a really cool conversation today about day traders and reload zones against previous lows. And are you a day trader? If you are, you had to take that trade and just live with the results. And that's tough, and Kevin and I were even joking about that before we got the video going here today. Even if just watching these free videos, you should have been able to pick up, if you watch these videos consistently, 3 unrelated reasons. Maybe you like W's, M's, maybe you like empires, maybe you like inside bars. It's up to you. Trade location. You guys all should have picked up on this reload zone concept. Indicator confirmation, divergence, right? Interestingly enough, like with setups, that's not the hard part of trading. And I actually find it kind of funny how a lot of new people to trading who just sort of get it, they've built their setup, they vet it, they believe in it, and then they're like, hey, this is my setup, it's a secret. But ironically enough, that's not the hard part of trading. The hard part of trading is actually following the plan and following the setup and taking the trades when they come in. Um, and then, of course, understanding you're never going to be right 100% of the time. You got to book losses sometimes. It's just the way it goes. So, thought it was really interesting. Actually, we're going to start up a new demonstration model back in the fall. We did a demonstration. It was a lot of fun. Spent, I think, a good 2-3 months building out a particular setup, a day trading setup. I want to be a day trader, we called it. And what I really loved was watching the. I just set up the very basic model and just showed everybody on the site. This is how you build this setup. This is how you vet it. And we went through, like I said, 2 or 3 months of data every single day, showing win, loss, blah blah blah. And the results, ironically enough, at the end of the experiment were fantastic. So we're going to start another one here, trying to do a day trader setup through the New York Kill Zone, or basically the retail open there in the New York session, trading a product out of Europe. So this is specifically a setup that we're going to cater to the European crowd. Anybody can do it, but it's just, especially in markets like this that are not trending, they're violently ranging all over the place. This is a fantastic opportunity to work on things like day trading plans. So that's actually how we're going to try and keep ourselves busy through this period where really I think Joe Sixpack investor, put your dollar cost averaging plans into place. If you can buy below value, awesome, love it, sexy. You want to make it really easy in the stock market. Just find stocks that are trading at less than cash on the balance sheet with no debt. I mean, perfect. You can't have a better scenario. And while markets are trying to stabilize and trying to find their footing to set new trends, which I think is going to take some time, this 2020 is going to be a wonky year. I think this is a great opportunity to work on things like day trading plans and trading opening ranges and 2-to-1s, and can I find setups that are 3/4 accurate, that kind of stuff. Kind of a ranty offering here today. Sorry, everybody. I don't know whether you're getting any value out of this. I hope you are. Same conversation as the stock market risk. In fact, the irony of it all is when we look at these assets from bigger picture, there's not a heck of a lot of difference between the stock market, the crypto market, the oil market, and ironically enough, even the gold market seems to have caught this risk bug up to a certain degree. And interesting enough to see the risk-off assets are actually starting to calm down here a little bit. So a little bit of a disconnect between gold now and the bonds and yen. Interesting to see. You can see stocks. There's no W here. And this is probably the biggest concern that I have, is that oil's actually put in a new sell signal here. Uh-oh. So don't kid yourself. I don't think we are at the bottom just yet. I'd be really surprised if we were. But nonetheless, it is what it is. So speaking about the corn, again, exactly the same conversation about stock market. We dumped. And actually, it was really cool in today's daily brief. One of our longtime site members, Marat, who also happens to be a TA in our Level 1 education program, is a big fan of Pi and some applications of Pi to things like WD-GAN and stuff like that. He loves that stuff. We had a presentation by Marat today on the COT reports. And actually something that jumped out at us, and interestingly enough to see things like the silver market, the COT reports are just screamingly bearish right now. But interestingly enough, something like Bitcoin, if you actually go look at the COT reports, you get some really interesting data. Obviously, on this big dump, the small specs, they all got destroyed. It's just, unfortunately, it's a sad function of the market. But very interesting to see what the large speculation, the institutional players are doing through this event here. That actually really caught my attention. So I won't go into it here, but needless to say, I think TRIers really enjoyed the report by Murat today, and actually he's going to try and make it a relatively regular contribution. What are the commitments to traders reports telling us of different markets? So super excited. Value added. 1 + 1 = 3. I love you to death, Murat. Hugs and kisses. Mwah, mwah. We've talked to you recently about how I thought that this was sort of like a trader's trade level there on the corn recently, and on balance, cost of production kind of stuff, that's 4,300. On the other side of the halvening event, that would basically be about, 2,600, somewhere in that neighborhood. Maybe I guess 2,300. Pre-halvening, all right, if you bought your coins, and we fast forwarded to like a couple months from now. So on balance, I don't have a problem whatsoever with people actually even just dollar cost averaging into Bitcoin here. I think, once we get on the other side of the halvening, everybody's going to be, my average cost of production is about 5-6 grand, so I'm long from 4 and change, feeling pretty good. So I like dollar cost averaging. I get the sneaky suspicion that this was a trader's trade down in here. As you can see, moving averages are all basically pointing down. There's no hurry here to call a bottom. And, our momentum indicators have not gone into divergence as of yet. So it's not really like where price is telling you, hey, I'm a lot stronger than what price is leading you to believe. Right now, to me, this feels very sort of dead cat bouncy. 13 EMA coming screaming down here, and it wouldn't surprise me if 13 EMA acts as resistance. We talked recently, and you can see these lines. What is our trading range? Top of the range, bottom end of the range. They did the other day dip into this, and this is just like that gold chart I showed you from earlier. This was, in essence, a trader's trade. If you are a Mountain Man fan, then you can see the exact same trade as what we just saw on the gold there this morning. Exactly the same thing. So, there are setups out there, and that's what I was sort of saying earlier. I'd like to get back into trading these sort of day trader setups, but I probably won't be talking to you guys in the public too much about that. For the public right now, the message, and it's the same thing as the stock market, is, the whole world has just gone on pause. And the higher-ups have said, stay in your homes. If you go out surfing right now, you're going to get handed a massive fine. So stay in your homes. Talk about a controlled society, eh? How quickly our world changes. But it is what it is. I can't see, if Bitcoin's an ultimate sort of sentiment indicator, I can't see this thing turning until the rest of the world sort of says, okay, fine, it's back to sort of business as usual. And, me, I think I've said this to you before, for me to really think, wow, this market is oversold and it's going to rally here, I'd have to see signs internally that, we're in divergence. The price is a lot stronger than what price would lead you to believe. And I just don't have that just yet. We did get an indication. Willie did get stupidly oversold there. So a terrible place, in my opinion, to be a seller. But that doesn't necessarily mean that Bitcoin's a buy. It just simply means that, if you wanted to be a seller, you can clearly see where you were supposed to be a seller up top here. How ironic, right on that 18th date that we talked so much about there. So, like the stock market, Bitcoin's trying to find a bottom. And I wouldn't be in a big hurry here. Just let this develop. We might perk up into moving average resistance, then dip back down kind of idea. When we see the W's come in, we'll know, okay, it looks like the correction is done. And it's just not here just yet, guys. Simple as that. Looking at altcoins, I think I sort of said this yesterday. I'll repeat the same message. Question ultimately here, I think yesterday I showed you like this Tezos versus US dollar. I think versus US dollar, these things are coming down into interesting areas. But, like I buy all my altcoins on Trex through my Bitcoin stash. So versus Bitcoin, ironically enough, this actually to me says that, hey, this thing could come down a bit more. So if this thing versus USD has bottomed, what does that maybe mean? Like if we look at it versus like US dollar down in here against these lows, what does that mean? Maybe what that means is, versus US dollar, this thing doesn't move. Versus Bitcoin, it comes down. Maybe that means Bitcoin's got to go up a bit. Tough to say. I think it's a good idea to judge your investment ideas versus something stable like US dollar, but that's just me. Regardless, if you had missed the boat on these old previous stories, market's giving you the opportunity to get in off the original bottom. If you want to wait for W's to come in here, I think that's not a bad idea. Do we have any signs of divergence yet? Probably not. But we definitely got location. So just like in the stock market, build your shopping list. This, ironically enough, is now, in my opinion, this is a buyer's market. So just simply be patient, wait for the indicator confirmation in the W's, and away you go. Rinse and repeat. But again, as I said, I don't know whether there's really a big hurry to call bottoms here until we get through the end of the month. All right, guys, that's basically your market summary here as far as I'm concerned. Hope you got some value out of that. PMA for the win. I definitely think this is an excellent time to go back and review your trading plan, review your setups, what gets you to act, what type of risk taker you are, maybe clean up some crappy trades you did in the past. Shit happens. Maybe even start fresh. And, of course, if you need help with all that kind of stuff, that's basically what TRI is all about. All right, guys, have yourself a great day. All the best, and bye for now.